the two big assets that I look in all of this is really obviously cryptocurrency and technology stocks, because they seem to be outperforming debasement more than anything else. They're in a log trend channel, which means that basically over time, if the cycle's extended, the price goes higher. And I think people don't really understand this mechanism because of what happened in the kind of stunted cycle of 2021, that we've kind of got the opposite of 2021 at play here, which is that time is being extended and therefore price likely gets extended upwards. Just zooming in now, is we use our financial conditions index as a lead on total global liquidity. And it has been sideways for a while, but it looks like it's about to expand again because it's the dollar, interest rates, and all of those seem to be moving in the favor of that, which then gives us a longer lead on the cycles. Your best guesstimate right now of when liquidity peaks, is it Q1? A bit longer? I'm in the camp of Q2, but obviously it's probabilistic and it can change, but it's not this year. And
no, it's not this year.
That's a big important factor for markets.
Yeah, it's. I mean, in my view, it's at least 6 months away. I mean, the estimates we came up with, we use leading indicators. Those leading indicators are based on factors like what the business cycle is doing, what's happening to things like oil prices, what's happening to volatility in the bond markets. I mean, a number of things. But that actually comes up with the latest figure that I saw was March of next year. So it's pretty much, close to where you're saying.
Raoul Pal believes that cryptocurrencies are on the verge of surpassing the internet in terms of adoption and financial impact. He predicts that digital assets will reach 4 billion users by 2030 and could surpass $100 trillion in market capitalization by 2032. Mr. Pal's bold outlook has generated both enthusiasm and skepticism within the crypto community. His analysis compares the early growth of the internet of that of cryptocurrencies by comparing cryptocurrency wallets with IP address data. His conclusion: cryptocurrency adoption is growing faster and at a faster rate than the internet over the same period. Mr. Pal estimates the global number of cryptocurrency users at 659 million, with an annual growth of 137% over the past 9 years. By comparison, the internet had approximately 187 million users at the end of 2000, with an annual growth of 76%. Pal predicts this growth will slow slightly, reaching 1 billion users in 2026 and 4 billion in 2030, which would represent roughly 1/8 of the global population. Pal also predicts the cryptocurrency market cap will reach $100 trillion by 2032. He attributes this potential growth to two main factors: currency devaluation, which he estimates accounts for 90% of the current price action, and network adoption, which he estimates accounts for 100% of cryptocurrencies' outperformance versus fiat currencies. These combined forces, he claims, could rewrite the financial system. Cryptocurrencies are growing rapidly, faster than any other technology ever seen. Regardless of whether or not we reach 4 billion users by 2030, the pace of adoption is breathtaking. Pal's prediction of $100 trillion may seem far-fetched, but if network effects persist and traditional monetary systems continue to falter, it might not be so far-fetched. According to Raoul Pal, the extended cycle will lead to much higher prices for tech stocks and crypto coins like Bitcoin, Solana, and Ethereum. Before we move forward, if you want to stay updated with the latest crypto events and news, you can subscribe to our channel and like this video. Now let's get back to Raoul Pal's view on Solana and the overall crypto market.
One thing we did do, and I just wanted to get your thoughts on this, gold has been an interesting market. It kind of does what it's supposed to do right now. But what we found is gold seems to be highly correlated with financial conditions, not real rates and all the other things it was linked to, but it now seems to be pretty much real-time financial conditions. So, it's been in this kind of wedge pattern recently. Let's assume that the dollar weakens a bit more from here, rates come down a bit more, that'll break out gold because that's the majority of financial conditions, which kind of leads everything we found by about 9 months. So gold has become really interesting to watch, and for me is now quite explainable. It goes from periods of being explainable to not explainable, but that pattern in gold I think is a important one. I know you look at gold as well.
The cryptocurrency market could be in the waiting room before the next phase of price discovery, a development that could cause institutional capital to extend to a historical 4-year cycle, according to industry observers. While the cryptocurrency market awaits its next catalyst, the liquidity dynamics of the slow business cycle could extend the traditional 4-year cycle into the first or second quarter of 2026, according to Paul. Many key elements of the crypto ecosystem are in the waiting room ready for launch. You have to learn to be patient. The path is clear, but never expect absolute perfection. Paul uses the Business Cycle Index as a macroeconomic model to track the current state of the global economic cycle. Paul's analysis that cryptocurrencies are in the waiting room is in line with current market behavior, according to Emmanuel Cardozo, a market analyst at Bricken, a real asset tokenization platform. Institutional allocations to the top 2 cryptocurrencies remain strong despite the stalemate surrounding interest rate policy, he added. Meanwhile, stablecoin flows on Binance have surpassed $1.65 billion, which could be seen as a harbinger of renewed investment in cryptocurrencies, as these are the primary funding tools for traders. Some of the crypto market's top altcoins are preparing to leave the waiting room for the final parabolic phase of the rally, with the Solana token being the next to fall. Paul wrote, sharing the chart below. This chart features an ascending triangle pattern, perceived by technical traders as a bullish continuation pattern, signaling a potential price breakout. Following the confirmation, Paul predicts that after the Solana token, SUI will be the next altcoin to gain traction, followed by Dogecoin. Once larger cryptocurrencies outside the top 10, also classified as other, start to recover. Meanwhile, the XRP token is in the midst of a boom, while larger altcoins outside the top 10 could take longer to launch. 2 months ago, Paul claimed that the current cryptocurrency market cycle reflected similar trends to 2017, when Bitcoin's price soared over 1,255% during the year. It's spookily similar to 2017, Paul stated, predicting a longer cryptocurrency cycle than in previous years, as the weakening US dollar could indicate that it is still far from reaching its peak. Paul cited Bitcoin performance in 2017 as a historical benchmark. The asset rose from $1,044 in January to over $14,000 in December, an increase of 1,255%. Howe argues that this is not just a temporary boost, but a long-term development supported by rising fiscal pressures and debt. Paul agrees, but focuses on cryptocurrencies. He believes these are highly sensitive to liquidity changes, acting as high beta investments and highly responsive to capital flows in global markets. Paul predicts we are entering what is known as the banana zone, a period of exponential gains for cryptocurrencies driven by liquidity, narrative shifts, and the return of retail investors. His models suggest that the cryptocurrency market capitalization could more than triple by 2026, potentially surpassing $10 trillion.